within the first year. So if there's two things, so the cash flow is obviously the key thing, and that there's a 20% failure rate of any startups. In terms of the cash flow reason, it isn't actually really that helpful a reason, because it's a bit like asking a doctor, what happened to the patient? What happened to my relative? And they go, well, they stopped breathing. And you're like, okay, why did they stop breathing? And you're kind of going, right, well, it was to do with the heart or the lungs or whatever. And then that fed through. So whilst cash flow is given as the reason, it can be a bit difficult to see what the underlying cause is of the cash flow drying up. So that's where I think the support of Enterprise Northwest, in terms of what Keelan has just touched on, is invaluable when you're starting up. Likewise, having an accountant or somebody, an advisor, to kind of keep you right on certain small things, to just ask those questions, kind of go, why are you doing it like that? Or have you thought about this or whatever, is kind of key. And it's not, there's no silver bullet to reducing that 20%. But what you're talking about is increasing your chances by 1 or 2% at each thing, and just kind of building on that and building on that. And that reduces the risk of the cash flow reason. So there's so many different variables go into a company and why cash flows dry up. And as you build on that, it'll kind of prevent those main reasons for why they fail. So like Keelan said there, you do cash flows. The start, you might come on and go, this is going to be the best thing ever. I've thought all of this through and I don't see any problems. We're going to turn over £1,000 a week and there'll be a profit of £500 a week. Excellent. And then you kind of, the business planning process supports you in the way that you kind of go, right, but what about insurance? What about provision for taxes? What about this? What about that? And eventually you kind of go, right, this is the more realistic figure. And actually now, had you not seen that, you maybe had a few banana skins up ahead that would have caused the business to fail. So from that point of view, I think that's the main thing. It's like a well-maintained car or, kind of healthcare, it all kind of goes together. There are still risks, and there are still, you could drive your car into a wall and listen, you crash and that's at the end of it. But there are, ways to kind of reduce that in practical steps. And that's basically what we're here to try and do today, I suppose. So the first thing, before I bore you with those slides, I wanted to give that introduction. But basically, the point I'm trying to make is that between business planning, asking questions, kind of seeking the advice, how does this work? How does that work? What do I need to be aware of here? That's really what I'm kind of trying to emphasize, is that all reduces your chance of something going wrong and you having to react. So it doesn't take it away completely, but like I said, it helps. So with the business plan process that Enterprise Northwest provide, really it is to make sure that you do understand your market, you set milestones, you do determine the feasibility of the business, and it is about identifying those hidden costs. So whilst there are people who set up a business and just don't do this and kind of do it without any kind of business plan or research, and they do make it, it's all about that kind of increasing your chances of survival and reducing that 20% failure rate. So it takes a bit of time. You'll learn things as you go along, and you'll get kind of key advice and things like that. So that's what it's about. Likewise, once you get it up and running, a good accountant can guide you through the requirements that you have to do. Just it's really trying to make sure that at a particular point you go, do you know what, I'm not too sure about this. Do you know what, I'll just ask the question, and you can get the answer back, and it stops you from potentially having something that takes you 3 months to sort out, or cost you 2,000 or 3,000 of vital cash flow that you have to cover for that period of time. So it really is about trying to minimize the risks. On the side of that, it's also from our perspective, the service that we like to say is the software side and kind of the compliance side, so keeping the business right, can be a time-consuming process. So doing your bookkeeping, keeping things, whenever you're starting out, you have a lot of different things to look at. And really what we aim to do is try and simplify that as much as possible. Again, so it just kind of minimizes on another thing that you can focus on growing sales or, figuring out whether you need an employee or the strategy of the business or whatever it is. Also, identifying tax efficiency. So, it's probably impossible to know all of the different, tax reducers and taxable ways to do it. And even if you did in a year, next year, they're probably going to be different. So you'd have to keep yourself up to date. So from that point of view, you might be missing out on particular things. And that's why the support of an accountant, I would say, kind of pays for itself over the long term. Again, like I said, a sounding board for growth plans, both on the Enterprise Northwest side and the NA accountant. So I'm not talking about us in particular. Your accountant or advisor should be there to kind of, as a sounding board where you can say, listen, I'm thinking about doing this. What do you think? Are there any particular aspects of it that you would be concerned about, or how do you think it would work? And it may be that the answer that comes back is not what you wanted to hear, but it can prevent you from taking a big mistake that the answer comes back and says, well, have you thought about this and this and this and this? And once you add all that together, like Keelan says, you're maybe not, it's maybe not the way you thought it was going to be. So it prevents, there's going to be enough ups and downs as an entrepreneur starting up your own business. You want to keep the roller coaster as kind of not as scary as possible, and make it a bit more of a smoother ride as you can. Again, there will be ups and downs, and that's the business, that's the world of running your own business. But it can be it can potentially avoid you making kind of mistakes. Let's say the last point on this slide that I think is actually key. Anybody can come up with an idea. There's all the best ideas in the world. People can think, like Keelan was saying there, I have the best idea ever. It's going to make me a fortune. I really want to do it. It's brilliant. This company does it, that company does it, whatever. It is a different thing when it comes to executing the idea. It is, there are so many different factors that you have to be aware of, and how, particular learning experiences that you'll go through along the way. So the idea is one thing, executing it is the thing. And ask as many questions as you can about that, and try and keep you away from any mistakes.
Can I just go on there, Michael, just and say, just on that point about executing as a problem, is a great point, because not necessarily like we meet a lot of clients that are starting their business and they're at that startup stage, and some people have this illusion that you need to sort of quit your job on the Friday, your full-time job, and start on the Monday this new business venture. And I think, there is some people that think like that, and I think it's just to alleviate that sort of mindset that, it's perfectly normal to have a full-time job or even a part-time job and have a business on the side. Like, if it's making you money, and it's something you enjoy, and it's something that sort of, I suppose, you're doing anyway, and you're just making a wee bit of money out of it, I suppose that's completely fine. It doesn't have to be, it doesn't have to be a case where I quit this job, I start this business, it has to have a premises, it has to have employees, it has to look good and all that. No, it doesn't. If it's yourself, it's basically just keeping yourself right. I think we'll touch on that a bit later, and having a side hustle and all that. But so having a plan and kind of managing the expectations of time of running, you can still be full time, but you can still have a side hustle. But it's sort of just what your requirements are, having a side hustle, and we'll touch on that a wee bit later.
100%. That's, and a lot of businesses are, of some of the best businesses that you see out there, they start that way, and it's an organic kind of growth, and they kind of go, they notice that the market's there and the sales are okay, and it can be a much lower risk way of doing it, because you can kind of assess what the demand is and how it actually goes. And then whenever you're ready, if it comes to that, it can stay as a lifestyle business just alongside your normal one. or you might want to grow it and things like that. So there's no one path. There's various different ways to do things, and we will come to the criteria as to what way you should kind of maybe consider setting it up, but it'll be different for each individual. So that's why business plan and account are a good idea at the outset. In terms of very practical steps, so what I try and do, as I said, is to speak in plain English and say, listen, you don't need to know what section 134 of such and such is and the Companies Act and all this sort of stuff. These are the practical steps that we would say at the very, very start, any client that comes to us should do, and there's kind of particularly a good reason for it. The first one is actually in the top right. Open a separate business bank account. Do not have it going through your personal expenses. You can do that, but it's very, very difficult to unwind that. And basically what I'm talking about there is, if you start a side hustle and it's all going through your personal expenses, for you then to tally up maybe 3-4 months down the line, what were sales, but more importantly, what was business expense, can be extremely difficult, because you might buy stuff in Tesco's, but you're also doing your weekly shopping in Tesco's, and then 4 months later you go, was that a business expense or was that not? So from that point of view, very, very easy to do. You can set them up online now, set up a separate bank account. Straight, as soon as you consider doing a side hustle, any sort of business, that's the first thing that you should do.
Oh my God, just on bank accounts, a lot of my clients would find that it's difficult now, as traditionally you would have went up the town and just walked in and says start a business bank account. It's not that easy anymore. So and I suppose that's probably why Toast is kind of all about the digital side of things.
Yep.
Is there, like, what's the benefits of having like an online bank account? A lot of people have this, it's online, they can't see a bank, physical bank, and very much we're in a society now where an online bank account can be the most practical way for fees and for other things. So just
exactly. Definitely there are, and a lot of I suppose they're termed challenger banks. They're not the normal high street banks, but what the offering is that you can open them much more easily. So again, they use technology a lot to try and do that. Now, it's not to say that you can't do it in a physical sense, but it just makes the process a lot easier. So the likes of kind of Starling, Monzo, Metro Bank, to be honest, even things like Revolut or Wise actually do. So they were TransferWise. They do quite good offerings for that. And really, the reason why it's quite good is because it can remove you having to manually take some steps. So we'll come to that a bit later. But yeah, basically, there are a lot of different offerings that kind of change the way maybe if you approach some high street banks, there's a lot more of what do you call it, like a complicated process to do it. There's no reason why any of these challenger banks are, you're not losing anything. The funds are protected the same way they are by the financial services protection, all that sort of stuff. It's all regulated by the FCA. So as far as safety goes, it's pretty much all the same. Does that answer your question? Okay.
Yeah. No, 100%.
Oh, okay. The next thing is we would suggest is some sort of software to keep track of your expenses. A pen and paper and keeping invoices and receipts becomes extremely difficult after a period of time, especially if as I said, if it's a side hustle and it's kind of touching between personal and business expenses. A software package, they're relatively inexpensive now, and can save you a lot of time. So if you for instance, if you want to total up your sales and you have to go through 40 invoices, that might take you, I don't know, depending on the invoices or how quick you can use your calculator, half an hour, something like that. If you're paying, a 5 or a 10 or a month, that's an hour that you can spend on your business and not doing a sum on a calculator. And then you might make a mistake and stuff like that. So the software can assist you with that and keep it right. The other thing is HMRC. So again, see abbreviation with thing. So the revenue or the tax man or whatever you want to call them, will come back or can come back and say, okay, you claimed £1,000 in expenses there. Show me. And if that was 4 years ago, you go, oh, where's the receipt? Where's the receipt? And that can be pressure if you don't have it. So if you get this right from the outset, you get a request for information, you click a few buttons, there you go, there are the receipts, that's it. And so you've no idea the stress that can save. And again, as I said, it's relatively inexpensive, so that's good. The other thing is accurate and clear, so it'll add it up. They don't make mistakes unless you do something wrong, so it keeps it right that you don't file an expense for £15,000 when you meant 1,500, and you're kind of going, why have I got a huge tax bill here? And you've got one zero too many. So silly stuff like that, but it all adds up. The final one I'd say is if you are over the certain thresholds that we'll come to, register as self-employed. So you don't want to fall foul of HMRC, the taxman, whatever we call them. So just keep yourself right, and we'll explain as to the requirements of when you have to do that. Any questions, anybody on that so far? I think we're all good.
If anybody's any questions, just write in the chat, even or unmute and just shout out, and at any point in time.
No problem at all. Yeah, but in relation to the selecting an accountant piece, what I would say about that is that anybody can set themselves up as an accountant. It doesn't matter what experience they have. Literally somebody, my next door neighbor down the road who's a courier or a lorry driver or whatever could just go, do you know what? I think tomorrow I'll become an accountant. And there's no law to say that he can't do that. And he could come to you and say, I'll be your accountant. And you're none the wiser at all as to what that is. So there are accreditations. So again, I suppose you think of it like an electrician or a plumber or a gas engineer or anything like that. There are accreditations. You might want to look for that when you're sourcing one. They don't have to have it. There are very, very good kind of bookkeepers and things like that who just didn't ever get their qualifications. It doesn't mean that they're a thing. It's just a thing to keep in mind. So we'll come to it, the experience. Secondly, the experience is if they have done this before, other clients and things like that, that should all build a picture as to how good or not that accountant is. If it's the guy down the road who you've no idea whether he has any clients or anything like that, you might want to start going, don't know, do you have an accreditation? No, actually I don't. Right, okay. So just be mindful that somebody can just do it and kind of con you out of money. So just bear in mind. Again, the services that they offer, if your growth plan is to, like Keelan said before, get a premises, maybe get some employees and things like that, and you're starting out with an accountant who only offers kind of basics of like self-assessment and filing accounts, when you come to them, maybe ask him or her to do payroll, they might turn around and say, listen, I don't offer that. And then you're at a point where you're splitting between the services. So just make sure that the growth plans that you have align with the services that the accountant has. Again, the experience with software is probably going to become more relevant because HMRC, the taxman, are kind of gradually progressing people towards a more digital thing. So if your accountant has no idea how to use that, you may be forced into a split or a separation at some point. So might want to do that. Just one question, Ian Young. I use QFile, it's free, and I find it good, and also works with Microsoft. Yeah, there are lots of different software products out there, and as long as they cover making tax digital with HMRC, doesn't matter which one. So really good tip there from Ian. Last one is pricing. Like everything, if it seems too good to be true, and you're kind of going, well, my account only charges me 200 quid. a year, you're kind of going, okay, you might want to see how that is. It really depends on the services that you have. And you would want to see that the price kind of is reflective of what services you have. And it's like anything. If it's too low, there might be an issue why it's too low. Not always, but again, it's just the buyer beware thing. So just there are people who because it's not a protected term, and anybody can set up, just be cautious around that. So all those factors together really determine what you should be looking at. Like Keelan said there, some businesses start up as side hustles, and they remain side hustles forever. The way HMRC look at that is you're allowed to take income of £1,000 per year, right? So the year runs from April to April. So if you make £1,000 over that period of time, then you're okay. So £999 or below, or sorry, £1,000. What you have to bear in mind with that is that's income. There's a lot of people we meet who kind of go, I didn't make any money out of it, so I'm not self-employed. I don't have to do anything. Even if you brought in sales of £2,000 and it cost you £3,000 to do those sales, there's still a requirement to file a return on that. So it isn't off profit, which is a big difference. So the threshold or the level catches more people than maybe they than you particularly realize. So just be aware of that. That is £1,000 income. Doesn't matter if you spent it all on equipment the next week. So that's where it becomes a business, not a side hustle. Choosing a name, very, very probably one of the more fun bits to do with the business. Just be aware whenever you're starting out, it can be a problem later on. So if you start as well, I'll use us for an example. We have Toast, fine in the UK. There is a company in the US called Toast. If we wanted to enter the US market, we might have a problem. So just be mindful of those things. Now, as it turns out, we don't ever have any ambitions to go to the US, so it's fine. It's not a problem. But just be mindful of that. If you're setting up, maybe don't pick something that's already there, or particularly something offensive. It might be a good crack at the time, but then 5 years down the line, whenever you're growing your business and you try and incorporate, you might be refused. So just, I suppose, be sensible with it. As I said, they're keeping record of all your sales and expenses. That's probably one of the most stressful points, is if anything ever happens, is that you can be asked to produce them. And there's nothing worse than being asked for something when you don't have them. And let me tell you, there's nothing more expensive either. So if you take anything out of the 4 points that I had earlier about opening an account and all that, it all kind of leads into this, which is keeping good records, because you can be asked, and it's definitely, there's a reason why people are very afraid of the tax authorities. Because it's not they don't just come along and say, here, you couldn't send me those receipts over whenever you get a chance. It's not like that. So just be mindful and kind of respect them from that point of view. You'll be required to send a tax return. So this is for kind of a small business. So there are different requirements if it's a more complex setup. But you'll be required to send in your self-assessment by the 31st January every year. So if it was this year, it would be January 2023 for the year that's ending now. So coming up. So it's quite a big delay between the year end and when it's actually required. As I said, you have to pay the tax on that date as well, so be mindful of that. One other thing on that, which I think it's again, it points to why business planning is a good idea. If you make, say for instance, you do particularly well in your first year and you make a profit, which is great, and you have tax to pay to the tax man in January 2023. If your tax bill this year is 2,000, they will say, okay, great, pay us £2,000 now. But what they'll also ask you for is a payment, what's called a payment on account. And what that means is, because it's your first year, they'll ask for this payment on account. What that actually means is that the amount that they'll be expecting in January is not 2,000, it'll be 3,000. And that's they'll be expecting 50% of what you made at 50. So you made 2,000, they'll be expecting you to put a deposit down for the next year of another 50%. It's amazing how many businesses have reached that stage, and that puts their lights out, because they just go, oh, I don't have it. And HMRC go, you have to pay it. So just be mindful of that, is that there is your tax bill. They also request your deposit. And then the accountant would also have the audacity to come along and say, you also owe us £1,000 for filing it. So be mindful that, you know, that is why cash flow forecasting and planning is a very good idea. So that's that. Again, choosing your legal structure. This really depends on what it is. There's a lot of times we would be approached by a client and they're like, oh, it's all sorted. I've set up a limited company. I'm now chief executive of the company. And you're like, okay, and who is the company? And you're like, oh, it's just me. You're like, right, why are you a limited company? Well, because I wanted to be chief executive. And you're like, did you need to set up a limited company? No, it's just, if I want to be CEO, this is how I do it. And you're like, right. The problem with that is that limited companies have a purpose. Unless you know what the purpose is, or the reasons why you're setting up as a limited company, it is, again, another mistake that you can make, because the compliance requirements from a limited company are much more complicated than those of a sole trade. So like Keelan was saying, if you're starting off a side hustle business and you've set up as a limited company to do that, that is probably not the right way to do it. There are some reasons, but generally, if it's just yourself and you're starting out kind of small, you want to keep costs down, you want to keep things simple. And then as it grows, and if you start doing particularly well, maybe at that point you become a limited company. But you're looking at probably somewhere in the region of 3 times the price to manage a limited company as you would be if you were just on your own. So it probably is a bit of a, I don't know, a younger generational thing. It tends to be, and they kind of go, you know, you see it in their Instagram page, they're like, you know, chief executive, and you're like, okay, you didn't need that, and it's going to cost you to service that, but okay. So what do you need to consider? And again, it's where somebody like Enterprise Northwest or we can kind of help you with that. There's a number of different factors that go into that. For instance, if you're, you know, seeking a government contract, or you're looking to do work for particular entities, you may require a limited company off the bat. Like for Toast, for instance, straight away we were limited because we have to register for, you know, with Chartered Accountants Ireland, we have to do all the various different insurances. Limited company, straight away, don't have a choice. If I left tomorrow and went to a beach somewhere and decided to set up on my own as Michael Rutherford accountant, sole trade's probably fine for that. But it really depends on what your ambitions are and things like that. So there's a number of different things there. So how likely profits are, if the business is very risky, property issues, all of these things come together into which way you should go. So there's operating as yourself, or there's operating as a limited company. There's a partnership as well, which is slightly more or somewhere in between, let's say. But basically, you need to consider those factors, and I would say just get advice, because if you can answer that question yourself, you might want to check that you're just verify it, just check that. Doesn't take very long. Left the phone. We'll do it for free. Just don't make that mistake at the outset. There are some, as I said, there are some reasons why it's useful. If you're intending to make a profit of 100 grand in the first year, and that looks realistic, maybe a limited company. But listen, as I said, just get advice on it. I'll not go through these particular things. The reason why I've included them is basically to prompt you at some point. So if you at some stage go, maybe I should register this business, or I'm not sure, ask your accountant, ask somebody in Enterprise Northwest. But what we outline is the dates and times and the requirements. There's no point in me reading these to you, because one, it'll be extremely boring. Two, it'll be monotonous as hell trying to get through it. So this is the registration process for a sole trader. Quite straightforward, because it's for kind of smaller businesses and things like that. And then just a few different points to note if you're setting up as a limited company. It is a more complicated process. You probably want to get an accountant to assist you at least with doing that. You can go on the internet and buy them, but there are particular considerations that an accountant would just keep you right on that sort of thing. So, likes of if you are setting up as a limited company, like we said, company name, type of company, and the shareholder. So to try and make sure you get all of that correct, you're probably better asking somebody who knows on that sort of stuff. Like Keelan said, lots start as side hustles. It isn't necessarily the case that straight off the bat you go, boss, I'm leaving, see you. And I don't, there's a lot of people kind of walk out and it's maybe not the right way. They should maybe test it first and see how it goes. But if you're on things like Universal Credit can provide support. So if you're worried about the transition between kind of how you afford your living costs whilst you're starting up the business, Universal Credit can offer you up to 12 months support for that. And that just means that, starting a business is hard enough. Starting it with nothing to fund your living costs is probably pretty much impossible. You have to be very good. So it just makes it that bit easier that you can still, pay your rent or your mortgage, put food on the table, pay your bills. I mean, bills at the minute are ever increasing. So there is that period of support. So there are some terms and conditions associated with how that works. Speak to your work coach at Universal Credit to see what you'd actually be entitled to. Again, it comes back to the accurate and detailed information on your income and your expenses. Universal Credit will ask for that on a monthly basis to see how you're getting on, and that dictates what you get. So if you're making, say you get an exceptional idea and you're doing 10 grand a month, Universal Credit will obviously adjust the award to compensate for that. So it's important that you keep engaged with your work coach and with whoever is actually supporting you on that, and you can see your income and expenditures.
Just on that, Michael, I actually had a client this morning. He came on to me and he said, and literally he's quit his job there last Monday, a week ago. He started on the company. He hasn't traded a penny yet, and he has registered for VAT because he needs to get access to suppliers, which is fair enough. But he has, and I said to him, like, how much is your rent for the intended premises that he has? And he says 360 quid a month or a week plus VAT. And I said, right. And do you know how much you need to cover to cover the cost just running the shop, never mind your own personal stuff? There's good footfall there. This is the answer I got. There's good footfall there, around where I'm at. It's quite close to, I'm not saying names, but a lot of popular stores, and it'll attract a lot of people. And I was like, right, so let's just do some sort of quick cash analysis here to see, let me just tell you the price of gas and electricity at the minute for your own personal life and everything else. Luckily enough, he had no children. So that was a big pro, because he literally was like, oh, well, sure, I've worked for a certain company for a large amount of years. I think it was like 14 years. And he says, just had enough, just left. He's went cold turkey, and he is taking a month out of his savings. They plan to start this business. I'm not saying that's wrong, but what I'm saying is that I would be very scared, and completely with the current climate that we're in. As Michael says, he has his obviously mortgage or rent payments, electricity, heat, light, everything else. That's just his living cost plus food. And if you're any eater like me, food's quite expensive. When you're trying to run as well, but you have all that. And then on top of that, there, you have to consider sort of like, your personal survival budget. So, there's only, so that's all grand and well. And you're going to go, do you know what? I'm not going to take a wage for 3 months and all that. That's grand. But let me tell you, see, after 3 to 6 months, if you're not getting paid,
Oh,
and you're not getting your holiday, or you're not getting away, you're really nice out date by date, or do your hobbies and all that kind of stuff, and you don't have any time, you're literally just going to burn out. You're not going
oh,
to have a business. So money is people might say, I'm not in it for the money, but after a wee while, money does just become a necessity other than a need. So just be mindful that you might have this big passion and everything else, but just do a bit of financial planning,
yeah.
and set of cash flows. Um,
And definitely, like you said, there's not one way to do it. You can kind of run it alongside, see how it goes, maybe grow it, and it might be a more sensible way to do it. Or if you do have savings, just making sure that the savings are sufficient to cover both the business expenses that you have, but also the personal ones. Like you say, mortgage and stuff like that, and just making sure that you can actually live.
Question there, do
Just
we have?
one question there. Do you want me to take that before I move on?
So my suppliers are looking a VAT number. Can I voluntarily apply for a VAT number? So the answer is yes. The VAT threshold is 85,000. And yes, you don't have to hit that threshold to apply for a VAT number. For example, I was on that Tuesday. I have a business on the side as well, and I voluntarily applied for a VAT number when the business was just opened a month. The reason I did that was because, like yourself, Ian, I needed access to suppliers, and they wouldn't look at me until I had that VAT number. So yes, you can voluntarily apply at any point. Just be mindful that if you apply today, it's not going to be in by next week. There's usually a bit of a lag time. Michael will probably tell you a bit better, but there's a bit of lag time in terms
Yeah.
of getting your VAT number. But yes, to answer your question, you can do it voluntarily.
Yeah, it is something, again, like Keelan said, if there's a particular reason that you need it, then yes. There are downsides to registering for VAT as well. And you need to kind of be mindful of those. So what about VAT returns? Generally, you'd start in quarterly VAT returns, so you'll get a VAT period, and it'll cover the 3 months. You'll have to do those returns then, on a regular basis. So you'd need to be, if you're thinking about doing VAT returns yourself, you need to be pretty good at managing knowing your so what they call it is input and output VAT. So that's on your sales and your purchases. And basically the net difference in those you'll have to then pay over to HMRC. So you'll have to charge VAT in your sales if you register. And basically it's the net difference. So it definitely is something that you need to be mindful of, but there are particularly good reasons why you should. But yeah, you will be required to do VAT returns. Hope that answers your question. On the like Keelan said there, it's the transition can be difficult. It's funding your personal costs. So just whenever you're doing that, be mindful. Yes, the projections for the company are one thing, but you don't want to be going for a long period of time without anything to cover your personal expenses. So just be mindful that you have to fund both. So again, we use Xero here. There are other ones like Ian said there. There's QuickBooks, there's Sage, there's Xero, there's loads of them. What is good about them is that it can automate certain parts of it. and leave it that you're not having to do particular things. So like Keelan was saying there, why is an internet bank a bit better? Sometimes the technology in the existing banks just isn't there because they've maybe old systems or something like that. There's a couple in particular come to mind that you can ask them about something a bit modern. They're like, "Oof, we don't do that." Like, right, okay, so how would I do that? And they're like, "Oh, I don't know, we can't do that." So it sometimes is an advantage to have a bit more of a new technology. What it means is that you can connect your bank account to Xero. And what happens is you then raise your invoices or keep track of what you have to pay in the software package. And the bank account sits alongside. Whenever that money comes into your bank account or goes out of the bank account, so whenever you actually get paid for the sale you made or you pay the invoice that you have to pay, it'll automatically match it and go, okay, listen, you uh, did a job for that guy for £1,000. He's now paid you £1,000. Great, that's that done. You don't have to look at it again. But it'll sit there outstanding until that guy makes that payment, so that you're aware of, this sale's still outstanding. Again, it comes back to the cash flow issue. If you're not raising your invoices correctly and you're not chasing them up, listen, that is one part. It can be the hardest point to get over, but it really is the essential part is your credit control. So if you make a sale and some people aren't paying you, you can't fund that. So the business really will only survive if you're doing jobs, and there's people that come to us and kind of going, right, how much turnover do you have? And you're like, oh, listen, turnover great, 300,000, getting on great guns. You're like, right, okay, how many invoices are still outstanding? Well, about 250. And you're like, right, that is not like, that's great that you made 300 grand of sales. If it's not hitting the bank account, you can't pay. You can't pay your employees, you can't pay your suppliers, you can't pay anybody. So that is the one part that you need to be good at. It is the hardest part. I understand that getting on the phone and saying to people, listen, got a job fee 40 days ago, where's my money? It is the one that will keep your business alive. It's the pride thing. You swallow your pride or whatever gets in the way. That is a killer for business. So listen, there are businesses in the small and medium been going for years, and I look at their invoices and how long they've been outstanding. I'm like, this one has been over 120 days. What? Like, has anybody contacted them? No, listen, I know that guy signed. He'll pay me. Right. What happens if he goes out of business? So the quicker you are at recovering money, again, it's about the small percentages that add together to making your business a success and keeping it alive. So the software really can help with that. And you can then look, it'll give you a dashboard of how much you're owed currently. And it'll say, right, this is 30 days outstanding, this is 60, this is 90. And so it'll give you an idea of doing that. It'll also kind of chase them up if you want them to do that. So it'll send them an email and say, listen, this one's overdue now. Can you make a payment? So there are all those advantages to trying to get it up off the ground and getting it there. Also things like keeping track of receipts. Like I said, HMRC or the taxman will come or can come at some point and ask you, right, you claimed an expense of £150 here from Applegreen in Belfast. Where's the receipt? Right. I'm not sure if I can find that. What can happen, not always, but what can happen is the revenue just go, right, hit 150, that's it, gone. You don't get the allowance for that. And that means that you're paying tax on money that you don't have. Whereas if you're taking a scan of the receipt on your smartphone, that's it, done. You can get rid of the receipt, throw it away. Don't need it again. So it can take the pain out of trying to track receipts and things like that. One of the other key ones, seeing your current financial position at any time. So how much did we make in sales this month? How much did we spend? If the bar is constantly out of line, it means your business is going to run out of cash after a period of time. If the bars are all pointing up and everything's fine, you're generating cash and everything's coming in, and that's where. So it's a very visual thing. but it can be incredibly helpful to say, right, I need to change something. Like Keelan was saying there at the start, right, what do we adjust? What changes? How can we improve this? How can we make this a bit more realistic? So that's why the software is probably a good bit more useful. With traditional accountants, the problem is that you might get so say for instance they give you a self-assessment. Like I said, that'll be for April 2022. That'll include sales up to April 2022, and you file that in January 2023. By that time, the business could have completely changed, and you've no idea. So the real-time sales information means that you can react a bit quicker to what's going on, and just try and minimize costs to make sure that you're cash positive and things like that.
To be honest, just from an outsider, that I suppose I got a demonstration on a couple of online sort of accounting softwares recently. XERO was actually one of them, but it was really good from, I suppose I'm guilty of a old pen and paper kind of person. And it was fascinating to see that, straight away that it's just like your online banking on your phone, that you can log in and see your own finances and you tracking them, because we're always very good at tracking. Well, maybe not very good at tracking, but very good at knowing what money's in the bank, very easily going on our phones and stuff like that there. And similarly, when you have an online sort of package like this for your business, it's very easy to say, right, what's my current bank balance? What's my outgoings, my creditors, what's my debtors due? And it's kind of breaking down, right, how much do I have to play with here? And sort of looking at, raking off things coming in when they do come in, assigning them, and sort of, it just makes your life so much easier. There's stuff that you're doing anyway, but it's time efficient. It's live, is what Michael was saying. That live aspect is so important. If you're making any decision for your business, you can't go, sometimes you don't have time, the luxury of time to go, let me go back, let me check my finances, and let me see if I can afford this, without actually saying that. Whereas you could just go, right, okay, I just check my phone a day, I check the app, I see my bank balance, I see what I have to pay out this month, I see what's coming on this month. Can I afford to purchase this? Can I afford to invest in this? Decisions are just a lot quicker, and they're a lot more accurate. So that's what I took away from it, being somebody that is not an active user of it. And I suppose Michael will talk about, how the future of digital, bookkeeping is coming upon us, whether we like it or not. And I suppose this is an opportunity, like now in 2022, to sort of start adapting that process, so that when it comes forced upon us, we're not going, right, all hell for the other. I don't have a clue what I'm at.
Trying to get your pen and paper to
Aye.
fit through the thing.
No good. No
No
good.
good. But just on one of those things that you said, it's not an accident that the bank account, the invoices, and the what we have to pay are the kind of three key things that they put on the front of the dashboard. It all leads to cash flow, and that's the one, as I say, that you want to try. But yeah, exactly. You're using a pen and paper and invoices and stuff like that now. When that process comes eventually to your level, you might have problems. So it's worthwhile doing it. Again, this is for reference purposes only. Very, very quickly, 5 years for sole traders. So if you're working on your own, 6 years for limited companies. There are other requirements for what you have to do in that. I'm not proposing to read all this because it's there for reference purposes only. So it's there for you to refer back to. Again, likewise with the key dates. Some key dates, it'll depend on your circumstances which ones apply there. We covered the 31st of January, which is the payment on account, is what you probably should have in your mind, that it's not just the tax bill, it's also your accounting bill potentially, and the 50% deposit. So again, I'll not go through those. We'll send out the slides, Keelan, is that right? Yeah. Yeah, and so you'll have them there for that. One of the most common things is, do I need an accountant? Straightforward answer to that is no, you do not need an accountant. That is, you can do this yourself. So a lot of the times I get asked in client meetings, and they kind of go, right, I don't need you, that's fine. And in certain circumstances, I turn around and say, "You're right. We give a free consultation. We'll point people in the right direction, and we'll say, listen, do what you're doing, continue doing that, or change this, change that, and you'll be fine." And if their business is at a certain level, they don't require us, which is fine, not a problem. But the bit where it adds value is if you try and do it yourself, you have to know all of the different legislative requirements that change year on year. So this the best structure to take out your salary. Should I pay myself a salary? Should I take dividends? Should I do this? Should I do that? Should I register for VAT? All that sort of stuff. And it can end up, if you, the other side of it is, can I claim this expense or not? And there's very, very specific requirements. Like, take that one, for instance, entertaining clients. You would think, I'm taking clients out for dinner, buying them drinks. That's what drives my sales. I'm going to put that on as a business expense. It's not allowed. So that could end up costing you. But the reverse is also true, is that you're not claiming things that potentially you could avail of. Like, one of the most common ones at the moment is that if a lot of these businesses are starting from home, there's the potential that this is an office, that you're using your home as an office, or that, some of your internet could be allocated depending on what your business is, or your mobile phone. So all those bits would add up to, an accountant could go, listen, you should think about this, 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 and this. And that can reduce your tax bill. So you could, one, take the time and do it all yourself, which is, the how long it'll take you is one aspect of it. And the second is that you might miss expenses that you can actually claim. And what you might end up doing is paying more tax to HMRC than you originally would have. So on one hand, you go, that's great, I'm saving X amount on not having an accountant. It's costing me a fortune on earth, but that's grand. But the other side is, you then get a tax bill for 1,500 quid, and it should be 500 quid. And that's where, an accountant would add that value. It really depends on your circumstances, like with the company structure, like with, the business plan and all that sort of stuff. It really depends on your circumstance. For some businesses, they'll require an accountant straight away. For other businesses, it might be 18, 24, 36 months in the future. So that's just a reference for some things that are allowable, and then the common ones that people miss that are disallowed. So gifts to clients, and unpaid dividends, stuff like that. So